Welcome to another AriasWave update. Okay, so this is my second video for oil today. And the reason why I'm posting this video now so soon after is because we've seen a break of the line that I said should not be, the critical support that I said should not be broken for the idea. Okay, so using AriasWave, there are certain patterns that you can observe, and if they are correct, then certain levels can't be broken. And if that's the case, then this is over. There is no more I can put into this that could suggest any more upside movement. Now, I did my very best to not be bearish, okay, because I don't like being bearish. However, it's kind of like I'm playing devil's advocate when I am being bullish because I know that there's a potential for bearishness. There always is. Now, in the case of oil, in basically last year, we saw around, April, that the price went to zero. In fact, I think it even went negative. Now, I'm using a non-log chart here because it's easier to explain what I'm going to explain to you. Now, normally I don't go into this level of detail with the analysis using AriasWave, but in this case, I think it's important just for a few reasons. Now, the first thing is, once we went to zero, we had a quick bounce. It was actually quite a bounce. And then we had a small correction. Now, once we got to about this point here, right, I'm just going to highlight this so you can see what I mean. I thought that we'd see some kind of wave 4 correction, right? But because we saw all of this happen, I thought, well, this must be a 5-wave move. But along the way, I was not convinced. So to me, I stopped reporting on it until recently, when I thought potentially we could have been looking at a 1-2 pattern potentially moving into a wave 3. So if you know anything about fractal patterns, they repeat a lot, right? And if you know the pattern itself and how to identify it, those patterns in a correction, then you will understand that they have to produce certain results. Otherwise, they must be ignored and you obviously got something wrong. Now, I've had a similar view in the past, but today I just was just very keen on finding out where I'm wrong, because I'm wrong somewhere, right? So what I've sort of come to conclusion with is that wave 4 was expanded. Now, I believe it was expanded in a very big way, okay? And the reason I'm saying that is because this price action since August, to me, I can see a 5-wave pattern, okay? Now, that 5-wave pattern, it should only be there unless it's a wave 5, because otherwise it'd be producing a lot more results and it wouldn't be oversold. If you look on the daily, right, this is oversold, right? Now, it's not just that, right? There's a whole bunch of things I'm going to get into. So number one, let's go back to basically 2008. Now, this pattern, I've always struggled to understand how this could be a zigzag. Never believed it. Never believed that it was actually a zigzag. But then today, for some reason, I thought about it really hard and I thought, okay, fine. Maybe we are seeing an A, B pattern. And the move that we've seen up is a C. Okay? Now, the reason why I say that is because if you look in percentage terms at the drop since the top of wave A down to where that leg went down to here, okay, it's 78%. Now, within this pattern, I can see a complete correction, right? Granted, it's not a very easy to understand type of correction. That's why AriasWave kind of plays a role in trying to make sense of patterns that are usually very extremely difficult to understand. And then basically you try and measure out this pattern that goes to 0, and it basically goes far beyond that, even though it doesn't look longer. It is longer, especially on a non-log chart. Now, if you try to make any other pattern from here and here, all you're going to come up with is 5-wave moves with a correction and a 5-wave move. And the only thing that can happen after an A is a B, right? So to me, I'm just trying to think, where did I go wrong with my analysis? Now, in the past, I had something similar going on where I thought we had an A, a B, but once again, that is wrong. I mean, how can that be a B wave? It's a 5-wave move, right? But it's not part of a zigzag, and the clue is in this wave here. This is not a complete correction. So therefore, I can't say, oh, that's a zigzag. It does not fit what is supposed to be there. That's the whole point of AriasWave. It gives you those clues. Now, it's easy to just follow all these different charts and get yourself all across different charts, but practice does make perfect. And from what I can tell now, I'm beginning to think that whatever this is, whatever this move down was, it's just the first move down. What's happening now is a correction within whatever this move is. Now, it most likely is a giant zigzag, right? A very complex zigzag that will look something like this in the future. Obviously not to that extent, maybe something like this, okay? A very long zigzag, something that will probably go negative again. Now, I know this seems pretty hard to understand or comprehend, but we've already seen price dip down that far. And if the pattern is trying to tell me something, then I'm just going to try and simply understand the pattern. I'm not going to try and force it anymore into something that doesn't make sense, even after a little while. So in saying that, all we're looking for now from $0 is a 5-wave move. And what comes next after that is a zigzag again, right? Now, you have to be very sure that it's a C wave in order to call it one. So the level of detail that I went to in order to try and find out if it's true or not is basically it's basically down to this, right? We had a sharp wave 2. It was a very fast 1-2 pattern, okay? So wave 4 is more than likely going to be really drawn out, crazy, expanded, right? Now, in my honest opinion, it seems like this is the case, right? And it's not usual, and it doesn't always make sense for a pattern to do this. However, it's not uncommon, but you have to understand how the corrective process works. And I suppose that's what AriasWave teaches you. And once you understand that, then you can go back and just try to figure out where you went wrong. Now, you can still use some Elliott wave type analysis to sort of guide you in certain things like alternation. Alternation, it's true, it does exist. But in this case, alternation is very insane, right? Like if you go to the RSI, you can see that the B wave has the most strength out of all the waves, including wave 3. So at first, it's a struggle to try and comprehend that. But then you have a 5-wave move down, and 5-wave moves alone are not a correction. So to me, there was no possibility that that could have been a wave 4 if there was like a wave 1, 2, 3, 4. It just doesn't make any sense, in my opinion, right? Now, I don't try to call tops easily. Like I really have learned my lesson with calling tops. I think that it's very difficult to do that unless you've exhausted every possible opportunity to go long. Every type of count has been exhausted, that you can no longer come up with any single count using AriasWave. And AriasWave has been back tested extensively for about 7-8 years now. Okay, so with the understanding that with this particular count interpretation, wave 4 ended in August this year, the only thing left to do is understand the fifth wave. Now, if you go back to RSI, even if you go to the weekly, right, you can see quite clearly, right, if you stretch this back out as much as you can see quite clearly that wave 5 is showing a lot of divergence. In fact, it's showing it 3 times in a row, and that would be for B, D, and basically wave 5, right? So in this, with having this type of thinking, I'm going to go to the smaller degree and try to explain to you what I'm seeing here. Okay, so basically we start off with wave 1. Okay, and then I can see a complete correction that goes from here to here. Okay, and then you go to wave 3, and then I can see a complete correction which actually also expands all the way up here. Okay, yes, that's the type of expansion that I am seeing happening in this chart. Now, mind you, if you put that out like this, you can see that there was a gap at the open this morning that really sort of makes you understand or helps you understand that something is going on around this area. Now, I've shorted this, and I shorted it once we broke that low that was not meant to be broken, which was supposed to be here, right? It broke it already. Okay, it messed around that area for a while, but then to me, it's literally just trying to tell me that this thing is done. Like I've tried hard, as hard as I can, to be bullish on this one, right? And every single thing that I've tried has led me to this conclusion after the fact that this line was crossed and broken down. Okay, I cannot produce any kind of count that suggests this is going to go high, and I've tried and tried and tried and tried to the point where it's now about shorting this damn thing, expecting a zigzag to the downside. I want to see a full 5-wave move before I take off my trade because I know there will be a correction that will erase some of those gains. Now, this is important for a couple of reasons, right? So if you look at the larger pattern once again, right, it's about the whole thing being a zigzag. So that means that we're not going to see anything go above the red line up at $148 or around that area, right? 147, whatever it is, right? The all-time high. Basically, we need to see a correction unfold here that looks like this before it makes its final move down to really finish off what is probably going to be a zigzag, in my opinion. I don't think it's going to be anything else. I don't think it's going to be like the start of a downtrend. I mean, how can you go that far negative? I don't know. Something tells me that that's probably not accurate. But you know what? It doesn't even matter because the same corrections occur in those patterns. Okay, so I'm not going to get into that. If you want to learn AriasWave, you're more than welcome. Developed over basically 6-7 years, and that includes back testing. It's just that now it's become the tool of this channel. It's basically what I use to do every kind of analysis. Every single wave is color coded according to the way I teach it. When you find out, you will know. Anyway, so that is why I think this move is most likely cooked and completed, right? Now, I don't say that lightly, okay? We had our 1, we had our 2, a 3, 4 was expanded, and then we saw this 5, this sharp little move at the top when everything else before it was kind of choppy, right? It was all corrective, okay? We had an A, we had a B, had our C, we had our D, we had our E, and then we had the final little tick up, and that's broken below that line also, which is around the same area. Okay, so now I believe that this thing is just going to make a move lower because it was already expanded enough as it was. Okay, now if you look at on the 4-hour chart, if you look at what I consider this to be the 5 waves, the wave 4 was so expanded that it's actually insanity how expanded it was, right? Now, in saying that, markets tend to have like a kind of symmetry to them, right? Where they have like a symmetrical kind of shapes and like look to it once you see, like what you would probably consider like a head and shoulders pattern, right? All those waves all those patterns are all just basically the waves, right? Just forming shapes based on whatever pattern happened to cause it. In this case, if it did happen, which I do believe it will, and I am expecting a zigzag down, I would expect something like this, something to go down to around this area first, right? And then potentially bounce up to somewhere around where the D wave ended, right? And then something to probably go back down somewhere around where the C wave ended back here, right? This would probably cause something like a head and shoulders pattern before we saw anything else happen. Now, this is very early days to be suggesting how it's going to look, but I am expecting a zigzag down and I am expecting another move, which I'll talk about another time. First things first, we need to see a move that produces 5 waves back down to at least around $61. Okay? That's when we can talk about anything else relating to these waves. Until we see that kind of thing happen, I'm just giving you my thoughts at this point in time. But I've also given you like a bigger picture view as to what I believe is going on, which I don't normally do. But in this case, I think that it's a very important because I mean this thing went to zero. You know what I mean? It went to zero. It's quite significant that it did that. And I believe that it means something long term due to the pattern that is a long term pattern that hasn't completed yet. Now, we saw this go to zero last year. We didn't see the stock market go to zero, did we? So we can't assume that it's going to cause a catastrophe of sorts. We live in a very strange time right now when things just happen the way they do. I mean, you've probably seen what happened to iron ore prices recently and all sorts of other stuff going on. Gold's been dropping, and I still think that it's going to keep dropping. So if you look at the CRB index, which I might do in another video, this might shed some light on what's going on. Okay. But for now, this is my view. So if we go down to like the 15-minute chart, we can see that this thing has just started to keep going lower. It hasn't come back to close that gap that we had at the open, right? Now, in saying all this, gaps, they don't always get filled straight away. Okay, and now I noticed this one didn't, and plus it broke a critical support area. Now, I don't know if you know or remember, but there is also a gap all the way back down here, right? Right here at about $20, right? Now, I'm not saying that's going to be closed immediately, but I would suggest that it would be closed eventually. Due to the pattern that we're seeing, it is the kind of pattern that would definitely suggest that that kind of thing could indeed happen. Okay? So hopefully you found this video interesting and informative. I'll catch you in the next one.